Okay, let's begin. Continuing the registration part. So, till now we have discussed the registration procedure, part one and part two. The person who is liable for the registration, the person who is not liable for the registration, compulsory registration, deemed registration, the cancellation part of the registration and the revocation part of the registration. We have understood the difference also regarding it. The GSTIN number and the unique identification number. Then we are learning the periodicity of your GST return for your different categories, that is for your normal taxpayer, then your casual taxable person, non-residential taxable person, and the composition taxpayer. So in the previous classes, we have discussed regarding the, I mean, uh, we have discussed regarding the casual taxable person, and now we will continue for the non-resident taxable person. So for non-residential taxable person, it is compulsory for them to register, and they have to submit this registration form along with its identification number, or you can call it as the unique number, or via PAN. But the question is, when he is going to register? Obviously, when he is going to, conduct his business over here. Apart from it, when he is supposed to get registered. So he is supposed to get registered at least 5 days prior to the commencement of the business at the common portal, which is available either directly or either directly or uh, I mean directly through a facilitation center which is notified by the commissioner. So ITC over here is available to them, available as a credit which is respective for the respective recipient. Now we will learn the procedure for the registration, which is for your normal taxable person. So for your normal taxable person, the first important step is one has to apply for the registration, which is available in the form GST REG 09. Again, the note what that he needs to register it at least 5 days prior of that business. At the next step, he is supposed to submit the applications along with the self-attested documents, which is of his passport, passport, then registration, which is duly signed or verified through EVC. Then the verification, the third step is the verification, which is the authorized signatory who is a resident of India having a valid PAN. Then verification of that particular PAN, the mobile number, the email ID of the applicant is also verified. Again, the PAN will be verified by the database. The mobile number and email ID are verified by sending an OTP. EVC is basically electronic verification code. Okay. I'm not sure whether you people are aware or not. Electronic verification code. The next step is generation of the temporary reference numbers. Then one has to do the advance deposit of it, which is equivalent amount to the estimated tax liability for the period. Same is applicable if you remember we have done for the casual taxable person. Next is the issuance of the registration certificate only and only if the amount is credited to the electronic cash ledger. So one has to take a note that one has that non-resident person can make the taxable supplies only and only after the issuance of the certification of registration. This is the main part of it. Now, considering the validity of the non-taxable, non-resident taxable person. So, whatever the for the period for which he has applied for the registration, or maximum of 90 days from the effective date of registration, whichever will be earlier will be considered to be valid. What if the non-resident taxable person wants to stay and continue for the business? That means there is an extension. So for that particular purpose, he is supposed to again apply, but in the form of GST RE 11, again directly through a facilitation center notified by the commissioner, again taking a note into it that he must do this, he must consider, or he must start applying earlier before the end of that validity which is granted for the registration for him to stay over here. Now again the question is ki, how many days this extension will be validated, or how many days he will be allocated to it. Again, as per the application, as per his wish, whatever he is requiring, or maximum of 90 days. Maximum of 90 days, whichever is earlier will be considered for the non-resident taxable person. Now, here, your non-resident taxable person needs to file the returns. So, filing the returns comes in the form of your GSTR 5, which is electronically, again, the electronic mode through your common portal, that is your GST portal. Here he has again supposed to go directly or through the facilitation center which is notified by the commissioner, which includes the details of the outward supplies and also the inward supplies, and considering that he will be paying the tax, interest, penalty, fees, or any other amount which is payable under this particular act or for this rules. So one has to take a note that within 13 days after the end of a calendar month, or within 7 days after the last date of the validity period of registration, he is supposed to file the returns. Earliest of all of this will be considered for the date of returns. Okay. So the refund part for a non-resident taxable person is applied in the serial number 13 of your GSTR file. Only if all of your returns are been furnished by him, then only the refund part will be provided to your non-resident taxable person. Now coming to the next part, that is the composition taxpayer. What is the composition taxpayer part? So here in this, whoever opts for that composition scheme is the person will be called as the composition taxpayer. Here, no input tax credit can be claimed by those persons, only considering the supplies which are taxable supplies. Here, one has to pay the taxes at the normal rates when he goes through the reverse charge mechanism. If at a particular at a state where no the business segments are different, like the textiles or the electronics or groceries or accessories. So, and again, considering that it is under the same pan, then they must register all of such business under this particular scheme collectively or opt out for this scheme. They are supposed to mention it compulsorily regarding the composition taxable person on each notice or the signboards which has been displayed for the purpose of advertisement or marketing, whatever it is, at that place of your business, so that everyone is aware ki, okay, this is basically the composite taxable person, or the and also he is supposed to mention this in every bill which is been issued by him. So as per the amendment part, uh, Act of year 2018, here a manufacturer, or you can say that the trader who is there, can also apply for the services to an extent of 10% of 10% of a turnover of rupees 5 lakhs, again considering whichever is the highest one. Here it will be highest because the government needs to collect the tax. So this amendment will be applicable. This amendment is applicable from 1st Feb 2019. Now the question is, who can opt for the composition scheme? So here, whose turnover is below 1.5 crore can opt for a composition scheme. In case of the northeastern states and the Himachal Pradesh, the limit is now low, that is for rupees 75 lakhs. So as per your CGST Amendment Act of 2018, a composition dealer can also supply the services to an extent of 10% of the turnover or rupees 5 lakhs, whichever is highest. And who cannot opt for that composition scheme is the one who is a manufacturer of ice cream, pan masala, or tobacco, those who makes interstate supplies, your casual taxable person, and your non resident taxable person will not opt for, or he cannot opt for the composition scheme. So here is the data, I mean the rates which is there taken from a particular site, okay, the GST site that is. So the type of business and the rates which are applicable is mentioned over here. So for the manufacturer and the traders, okay, those who are basically dealing with the goods, for them, the CGST SGST is 0.5%. For the restaurants who does not serve the alcohol, is not serving the alcoholic products, is 2.5% each for the CGST as well as for the SGST. So now you people have a task to check the bills whenever you go to a restaurant. Okay, so make sure that you ask for the bill, and in that bill you will be in a position to identify the rates which is there. Okay, so the other service providers can go for, I mean they are supposed to pay 3% for the CGST and the SGST. So how the returns are supposed to be filed by the composition taxpayer? So here he has to file the returns in the GSTR form 4, which is supposed to be filed annually by 30th April of your next financial year. It is same as the direct taxation. So here a dealer is required to pay the tax in a quarterly statement in CMP 08 by 18th of the month after the end of the quarter. And also the GSTR 9A is the annual return which is supposed to be excuse me, just a minute. Yeah, sorry for the interruption. Hmm. So, yeah. So we were on to the returns part. So here, uh, okay. So the GSTR 9A is basically the annual return which is supposed to be filed by the GST, I mean by the composition taxpayers by 31st December of the next financial year. So one has to take a note that here whoever is the composition taxpayer, okay, he is supposed to get registered under this composition scheme, which where he is not supposed to maintain any detailed records. Detailed records means basically all the details which are required for the normal taxable person, okay, that is the regular taxpayers who is liable for the registration with the threshold limits which we have discussed. Okay, that is the 40 lakhs, 20 lakhs, or 10 lakhs, depending upon the cases of supplying of the goods and services, or both, or only services, or only goods. Next, who is basically liable to tax on which supplies. Okay, so GST on the supplies which is made, tax on reverse charge mechanisms, and the tax on purchase from an unregistered dealer. So here are the differences which are considered for this particular topic. Now we are been coming with all of the definitions. I mean, we have covered maximum of the definitions or maximum of the terms, I could say, which is required for you people to understand that exactly what includes good, what includes your services, who is basically a taxable person, who is basically uh, I mean uh, what exactly that taxable person would do, or how one has to get registered, or say who is basically your uh, proper officer. So this key terms, okay, like businesses, what includes person, then what includes your India. So all these terms are very important to understand, just because if you understand the terms, it will be easy for you to apply it and to catch the points which we are discussing. Now, similarly, we know that the GST is your goods and service tax. Okay, so this goods and service tax are usually and supply. Correct. Here, if there is a supply of the goods and there is a supply of the service, or maybe both, then what happens is one can have the taxable event of it. But to understand what is supply in your GST, we are supposed to know that what supply includes, what is supply all about. Now, since we have discussed the word consideration, you people are aware that is a medium of exchange, okay, which is a very simple term to understand. Now, let's understand the supply, which is actually, uh, what exactly it includes. Okay, now this particular supply topic is again important, because once you know what exactly your supplies are, you will be in a position to value it. You will be in a position to say that from what place this particular supplies will be taxable, and at what time it will be taxable. Time basically not the clock hour basis, it's basically the date which is applied for it. So I will just share you the slides, the content. Okay. The supply under your GST and valuation of supply. Now, in this scenario, what you are going to learn is the levy and collection of your taxes. This we will be, doing only when we are in a position to understand what exactly your supply is. Okay. Then we will move on to the place of supply. You will be in a position to identify over there the interstate supplies and the intrastate supplies, which we have already covered in your dual GST model. Then what exactly it will be like for the export of services, export of goods, import of goods and services, the valuation of the supplies, the types of supply, composition levy, exemptions, the person who is liable for paying all the taxes, and the TDS part for your TDS part or under your GST. Just a minute. I'm just unable to do this. Yes, sure. Yeah. So the scope of supply. Okay. So it is given in the article 366, that is 12, a subsection 12A. So your GST is a tax on the supply of the goods or services or both, which you are aware. So what are the parameters for your supplies? Okay. So it is basically the furtherance course of business, the goods and the services which is made for the consideration. So there are three parameters if you could see. So further, what exactly your taxable event says. We have discussed this taxable event. Taxable event is the taxable supplies which is made by the taxable person in your taxable territory. Now, what exactly your supply would say? Okay, this supply will either be made or it would be made available to it. Okay, like for example, the actual production of the goods. Okay, the actual production of the goods is the made part. Okay, and like for example, that I am taking an order of it and I will be made it available to you within 2 days. So this becomes that okay, giving an assurance and it will be giving that in future. Okay, the futurable contract. So here the agreement for your supplies of your goods or services is to be made in future. So if you could see out the difference over here, the chart is something like this. Okay. Now next is the section 7 subsection 1, which is under your CGST Act, stating the scope of supply. Okay, so now here one has to understand that what it includes, what it excludes, and the other part of it, that what exactly, like if it is assumed or it is deemed to be supply of it. So here in this case, first part, let's see that what exactly your supply is going to include. So here your supply says that what it includes your supply for the consideration, supply for the consideration in course of your furtherance of your business. Then section 7 subsection 1b says the importation, says the importation of your services for the consideration whether or not it is for the furtherance course of your business. Section 7, subsection 1C says that supply is without consideration. You have to read this along with the Schedule 1. What does your supply excludes? It is going to exclude uh, which is covered under your section 7 subsection 2. It is the negative list of it, which is covered under schedule 3. Okay, you have to read it along with the schedule 3. And the other one, that is the deemed supply of your goods and services, this you're supposed to read it along with the schedule 2, the section which is applicable of your CGST Act is 7 subsection 1A. So now let's begin with what it includes. I mean, the supply includes. In that first part, that is section 7 subsection 1 clause A, your supply for consideration in course of furtherance of business. Okay, what here your supply says that it includes your sale, transfer, barter, exchange, license, rental, and disposal. This particular supplies is for the purpose of the consideration and in course of furtherance of business. In simple words, if I say course is basically there must be a buying and selling part, there must be a purchase and sales part. And furtherance is basically you know that you are not going to stop, you are going to continue, you are going to expand your business. Here, in this case, both the consideration factor and the course or furtherance of your business, both are supposed to be considered. Both are supposed to be considered. So take a note of this. Both are supposed to be considered equally. Now, let's understand more in detail that what exactly will be your consideration. So consideration is basically the payment which is made. Okay, the payment in money otherwise for the supplies. So here one has to make the deposits of a deposit which is considered as the payment only when the supplier applies for such deposits as the consideration for the said supplies which is there. Here, the monetary value which is there again. Okay, so I just skipped this. The payment which is made is basically done by the recipient or any other person who excludes, we are excluding the subsidies part which is given by the central or the state government. So this was one part, and the other says that monetary value of any act or which is forbearance for the supply. So it is done again by the recipient or any other person who excludes, we exclude the subsidies which is provided to them for the central and the state government. What is the exception for it? For the consideration part. So this will be only said that key when someone is giving the donation, or someone is giving out the gift, that is in a charitable organization, or the payment character is somewhat as a purpose to give a gift to someone or to donate it. So the purpose here is philanthropic, that is, no commercial gain has been achieved by it, and no advertisement has been done for it. Okay, it's not for the advertisement, no commercial gain. The payment over here is done as a character of the gift or the donation. So again, to a charitable organization here, if all these three purposes are served together, okay, then it will be considered as the exception part. Now, since here the word was there, business, we will be discussing the business part for specifically for the supplies. Okay, again, this we have covered, but let's recap it. So, any trade, commerce, manufacturer, profession, etc., even if there is no monetary benefit, here one has to see that if the activity is incidental or it's ancillary to it, or any activity of that same nature, even if there is no volume or continuity. The next is the supply acquisition, or supply or the acquisition part of your goods, which includes the capital goods and services, which is in connection with the commencement, which is closure of the business. Here, the provisions which are done by any club or associations, it is only limited to the members for the consideration part. Here, the admission for that consideration has been done through any premises. Services, which is who basically is the holder of the office, here he will be accepted in the course or the furtherance of your trade and profession. Here, the activities of a race club, which includes uh, by way of totalizer or a license to bookmaker, or the activities of a licensed bookmaker in such club. Next, any activity by a government or local authority as a public authorities will be considered as a business. You name it and it is there. Yes, there is some problem. One minute. Hmm. Now coming to the next part. So this was the supply for the consideration in the course of the furtherance of your business, which says that you should know that it is the both the condition, that is the word consideration, and the furtherance course of business must be go togetherly to frame it into the supply. The next we will be discussing is the section 7 subsection 1 clause B, the importation of the services for the consideration, whether or not in the course of the furtherance of the business. Just a minute. Okay. So import of your services. So here the supplies. Okay, under section 7, subsection 1, clause B, supply for the purpose of the consideration, whether or not in the course or the furtherance of your business. Here, the consideration part is there, but it is fine if there is no furtherance course of business. And if it is there, then also it is okay. So, in for both the cases, it will be applicable for it. Thus, it will be considered as the supplies. But in the first case, what it was, the supply is going to be made, but there your consideration along with the furtherance course of business both will be compulsory to satisfy it. And here only consideration is there even if the part of this import of services, if there is no furtherance course, it will be okay and it will be considered as the supply. Now, as since I have said you earlier that this particular clause is to be understood by using the schedule 1, which is the without consideration schedule. Okay, so in this particular schedule, it says that first part is basically if he's a permanent or if someone is permanently transferring or disposal of your business assets, then in this condition your the supplier has to avail for your input tax credit. If if a supply is a related person or a distinct person, then here the supply is made in the course. The condition over here, what it says is that here the supply is made in the furtherance course of business, again of the supplier. And exception to it is the supply by which someone is giving a gift to an employee. So that will not be considered as the supply. Again, highlighting with the value, the value must not exceed of rupees 50,000. Free housing, that is the persecute value, is not covered under your GST. Okay, that is considered in your direct taxes. Now, the question over here is what or who is a related person or who is a distinct person. Correct? So, a related person is basically, has the different pants. Okay, so here the officer or the directors of one or the another business will be known as the related person. Like we have our director, okay, or the office staff again is the related person. Partners in business, the employer and employee relationship, any third party who is directly or indirectly, who owns, controls, holds 25% or more of the outstanding voting stock or shares of both of them. One of them are directly or indirectly who is controlling the other person, who are directly controlled by the third party. Here they can control a third party also, or they are being controlled by the third party. Members of this same family, like, spouse, children of a person, or the parents, grandparents, brother, sister, if they are dependent on that person, only this will be considered as a related person, or a person who is basically associated uh, in any one another businesses, where one is the sole agent or the sole distributor or the sole consequent. That is the person who has the right to sell out the goods which is related to the business. So this was regarding the related person. Okay, this was regarding the related person. Now, what about the distinct person? So, here in the distinct person is basically who has the same PAN number. Okay, so like the establishment over here is through the single PAN, but it is to be registered separately. Okay, here the establishment again, since it is a single PAN, he is liable to be registered separately, and and in it can be in different locations in different states. Okay, so what type of transaction these do? It goes for the stock transfers or the transfer of new or used capital goods or fixed assets, or you can say bill to ship to transaction. Like for example, if I could elaborate, that is the vendor ships to a branch office, he sends the invoice to the corporate office head or the head office, like that. The centralized management function, like finance, accounts. Okay, sale of goods from one registration, services by the another registration, again considering the same entity, sending the employees on depletion to the group concerns, centralizing the billing to the customer, which is made the corporate office. But here the execution of this contract is to be carried out through the various registrations of the same entity, which is located in other or multiple states, you can say. So this was about the distinct person. So if I sum up for the difference of this related person and distinct person, the related person is I mean is have different pans, and the distinct person have the same pan. Okay. The next is the supply of goods, which is between the principal and the agents. So there is no condition as such, but one has to say that all the supply of, supplies which is done by them is to be fine. But between them, the supplies of the services is not considered. I mean, that is not covered, and hence it is called as the exceptional part. The import of services from a related person or his other establishment which is outside India. So the condition over here is the supply which is made in the furtherance course of business of that supplier will be considered. So here are the cases where the supplies can be without consideration. Now, deemed supply of goods or services, we have to consider the schedule 2 for this, which is covered under section 7 subsection 1a. So the activities, what exactly your schedule 2 defines. So schedule 2 says that it is related to those activities or transactions which is to be treated as your supply of goods or maybe supply of services. Basically, you're supposed to identify it. Okay. So we will just cover this first part of it, that is the transfer. What exactly the transfers is? Like, if we say, if someone is transferring in the title of goods, like for example, uh, that I am going to a shop purchasing a pen. So first, the in this case, the owner was the seller, and now I'm the owner. So here, the goods are been transferred to me. So what type of this services or the supply is? It is goods. Next, any transfer of right in the goods of undivided share in goods without the transfer of title. So someone who is doing that part, that means here the supply is called as the services. Any of transfers of the title and your goods under an agreement, okay, which stipulates the properties in the goods shall pass at a future date upon the payment of full consideration as agreed. So that is considered to be as goods, like you're going and purchasing a property. That is considered as the goods. What if it is a land and building related transaction? So whatever which is related to your land and building, it will be termed as your services. Okay, like any lease, tenant, easements, or which is licensed or who is supposed to occupy the land, or any lease which is letting out the building, which includes the commercial or the industrial or the residential complex, which is for the business purpose or the not wholly, it may be partly also, will be considered as the supply of goods or services. Now, if we check with the treatment of the processes, then here the activity says it is basically a job work. That is any processes which is to be followed, like the workers which are there, the laborers which are there in the industries. Okay, they are providing the services to it. So here the supplies are for the supply is named as the services. Next, okay, the next part, I guess we won't be in a position to cover since we are running short of time. So tomorrow we will be continuing. I mean, in the next session we will be continuing with the further part. Again, the schedule 2 is yet pending. Okay, we have just discussed the two transactions of it. So bye everyone. See you in the next class. Take care.
Thank
Yeah, welcome.